On the 10th of October 2024, Switzerland handed the bank details of 3.7 million accounts to 108 foreign governments. Account balances, tax numbers, addresses, names. Switzerland sends that file every autumn. It has sent one every year since 2018. So if you are a foreigner with a Swiss bank account, your own tax office already has it. The balance, the interest earned, all of it without anybody asking. Swiss banking secrecy is the thing everyone thinks Switzerland sells. For foreign clients, it has been dead for most of a decade. And across that decade, the money went up. Swiss banks finished 2024 holding 9.28 trillion francs, 10% more than the year before. 4.2 trillion of it belongs to foreigners, which means almost everybody has the reason wrong. Here is the real one. Start with the story you have already been told. In 1934, the Swiss parliament passed a banking law. Article 47 of it made it a crime for a banker to say a client's name out loud. Not a sacking, not a lawsuit, prison. The reason usually given is that Switzerland was protecting Jewish depositors from the Nazis. Hitler had made holding money abroad a capital offense for Germans. Gestapo agents were in Zurich fishing for names, so the Swiss criminalized disclosure to save lives. It is a good story. The historians who went into the archives looking for it could not find it. Sebastian Gex at the University of Lausanne calls it propaganda in those words in the Business History Review. The actual paper trail leads somewhere much less flattering. It starts in a Paris apartment. October 1932, French police walked into a flat in Paris where two executives of the Basler Handels Bank were sitting with their French customers. On the table were the bank's notebooks. More than 1,000 French names were inside them. 3 senators, a dozen generals, 2 bishops, and the owners of Le Figaro and Le Matin, 2 of the largest newspapers in France. France was 3 years into a depression and raising taxes hard. The men writing that tax law kept their money in Basel. 2 years later, the Swiss parliament made disclosure a criminal matter. Article 47 went through inside a much larger banking law drafted after the Swiss bank crash of 1931, and at the time it caused almost no argument at all. The law was written for the customers the French police had just caught. It was written so that nobody would ever get another notebook. The refugee story arrived decades afterwards, from the banks themselves, when Switzerland needed an answer for why it had spent the war as everybody's cashier. Here is where it stops being funny. In the 1990s, Jewish families went to Swiss banks looking for the accounts their grandparents had opened before the war. Some of them were asked for a death certificate. For people killed at Auschwitz, it took a class action in New York and a settlement of $1.25 billion to end that argument. The banks settled in 1998. They admitted nothing. Now what Article 47 actually changed mechanically because this part survives everything that follows. Before 1934, a banker who leaked your name got sued by you. After 1934, he got prosecuted by the state. Switzerland took over the job of enforcing the banker's silence, at public expense, whether or not the client ever complained. That law is still on the books. Parliament strengthened it in 2015. 3 years in prison for leaking Swiss bank data. 5 if you profited. And since 2015, it also catches people who never worked at a bank. Journalists, for instance. In February 2022, a leak of more than 18,000 Credit Suisse accounts went out to news organizations in dozens of countries. They called it Swiss Secrets. Swiss papers were invited in. Ta Media, one of the largest publishers in the country, said no. Its editor-in-chief gave one sentence for the decision. This law is a massive restriction of press freedom in Switzerland. So Article 47 still works beautifully. It just stopped protecting anybody's money. Because between 2008 and 2018, the entire product came apart. Not by treaty and not by any government deciding to be decent. By one salesman from Boston who once walked diamonds through American customs in a tube of toothpaste. His name is Bradley Birkenfeld. From 2001, he sold Swiss accounts to rich Americans for UBS out of Geneva. The scale from a United States Senate investigation published in July 2008, roughly 19,000 American clients holding somewhere near $20 billion the tax authorities had never been told about. Selling a secret account to an American means flying to America. So UBS bankers came in on tourist visas. They carried encrypted laptops. They were trained on what to say if a border officer asked them what they were doing in the country. Then they met the clients where rich Americans already gather, at parties the bank paid for. Art Basel in Miami Beach, a tennis tournament, a yacht race. Birkenfeld's biggest client was Igor Olenikov, a California property developer with around $200 million parked offshore. At one point, Birkenfeld bought diamonds in Europe with Olenikov's money. He packed them into a toothpaste tube and carried them through customs into the United States. In 2007, he walked into the United States Department of Justice and explained how the whole machine worked. He wanted immunity. He did not get it. He pleaded guilty in June 2008, was handed 40 months, and went to prison in January 2010. In September 2012, the American tax authorities paid him $104 million, the largest award they had ever made to an informant, collected by a convicted felon. Nobody has ever been paid better for a career change. Now the confidence. On the 19th of March 2008, the Swiss finance minister, Hans Rudolf Merz, told the European Union what would happen if it came after Swiss banking secrecy. You will break your teeth on it. 11 months later, Merz signed the emergency order that broke it himself. On the 18th of February 2009, the Swiss regulator FINMA ordered UBS to hand its American client files to Washington. The transfer went out the same afternoon. Somewhere between 250 and 300 people had their names put on a plane. The exact number still shifts depending on the source. UBS paid $780 million and admitted conspiring to defraud the United States. FINMA's reasoning ran like this. The Justice Department was days from indicting UBS. An indicted UBS might not survive the week. A dead UBS takes the Swiss economy down with it. So the regulator reached for emergency powers written for a bank run and used them to break the country's most famous law. 6 months later, Switzerland agreed to process American requests for 4,450 more accounts. On the 5th of January 2010, a Swiss court ruled that the February handover had been illegal. FINMA never had the authority. The files had been in Washington for 11 months. Then the Justice Department held the door open for everybody else. Between 2013 and 2016, 80 more Swiss banks signed non-prosecution agreements, handed over their account information, and paid $1.36 billion between them. 80 banks, one at a time. And underneath all of it, the Americans had already built the machine that settled the argument permanently. FATCA signed into law in 2010. The rule is short and brutal. Any foreign bank that will not report its American clients gets 30% withheld from every dollar of American income passing through it. No serious bank on the planet can survive that. Every one of them signed. Then the rest of the world copied the idea. The Common Reporting Standard, run out of the OECD in Paris. Switzerland agreed to it in 2014 and sent its first batch of data in the autumn of 2018 to 38 countries. 6 years later, it was sending to 108. So by 2018, the product is gone. Every foreign client of a Swiss bank is visible to their own tax office once a year, automatically, forever. Nobody left. Look at what those clients were prepared to swallow instead. In January 2015, the Swiss National Bank pushed its policy rate to minus 0.75%, and the commercial banks passed it straight down the line. If you were a wealthy foreigner sitting on a large cash balance in Zurich, your bank charged you rent for holding your own money. That ran for 7.5 years. Swiss banks paid 11.8 billion francs in negative interest to their own central bank across that stretch and handed the bill to their biggest customers, added up from the customer's chair. Your government can see the account. The bank charges you to keep it. And in 2024, the money in Swiss banks rose 10% anyway, which tells you the secrecy was never the thing. So what is? Start with the franc. Under the post-war system, 1 American dollar bought 4 francs and 38 centimes. Today it buys about 80 centimes. An American who moved $100,000 into Swiss francs in 1971 is sitting on about $540,000 today. No investment, no advice, no interest, just the currency. Inflation eats a chunk of that. It's still buried the dollar. Currencies do not behave that way by accident. Behind the franc sits a run of decisions Swiss voters made about themselves. in public at the ballot box. On the 2nd of December 2001, they voted on a constitutional rule capping how much their own federal government is allowed to borrow. 85% said yes. Swiss government debt now sits near 39% of the economy. The American number is 124. Then there is rule of law, which is the expensive one. Rule of law only counts when it is inconvenient. On the 19th of March 2023, Credit Suisse died. UBS bought it over a single weekend for 3 billion francs in a deal the Swiss government arranged. And FINMA wrote 16.5 billion francs of Credit Suisse bonds down to zero, while the shareholders ranked below those bonds still got paid. That is backwards. Every bond investor on earth noticed. Switzerland had just done the exact thing it sells insurance against. In October 2025, the Swiss Federal Administrative Court threw the write-down out. Unlawful. The bondholders won. It is being appealed. Think about who won that. A court in Bern overruled the regulator, the finance ministry, and the largest bank in the country. It did it 2.5 years after the fact. It did it for foreign bondholders who cannot vote in Switzerland and have never set foot in the place. That ruling is the product. The mountains are scenery. And then Switzerland does the thing no other financial center will do. It puts the question to its own people. On the 30th of November 2025, the country held a referendum on a 50% inheritance tax on estates over 50 million francs. The Young Socialists had put it on the ballot. 78% of Swiss voters rejected it. No brochure can tell a billionaire what that vote told him. The tax rules here get written by people who keep voting against taxing wealth. Underneath all of it sits a stretch of quiet nobody else can offer. The last foreign army to occupy Bern was Napoleon's in 1798. The last fighting on Swiss soil was a civil war in 1847 that ran 25 days and killed around 93 men. 2 world wars went round the outside. Every other city that has held serious money has a far worse century somewhere in the file. Vienna, Berlin, Shanghai, Beirut. So here's the answer the films never use. Switzerland sells the most boring product in finance and the hardest one on earth to manufacture. The promise that in 50 years, this place will still work exactly the way it works today. Same courts, same currency, same country. A dictator wants secrecy, and he can buy secrecy in a dozen cheaper places. A family with 400 million francs and a 100-year horizon wants somewhere the judges still function in 2075, and the money is still called the franc. Very few countries can promise that and be believed. Switzerland sat at the top of that list for as long as anyone has counted. It came off the top last year. On the 27th of May 2026, Boston Consulting Group published its annual count of the world's cross-border money. Hong Kong finished 2020 holding $2.95 trillion of other people's wealth. Switzerland finished with 2.94, $10 billion apart. The first time Switzerland has not been first. Nothing had to leave Switzerland for that to happen. Swiss cross-border holdings rose 10% in 2024 to 2.4 trillion francs. The money that moved was newer money. It came out of mainland China, and it went to the nearest place with courts it could believe in. Switzerland's promise has been under test since 1815, and it has held every time. Hong Kong's version of that promise is 1 year old. Ask again in 2075.